Hi, this is Alessio Rastani of Leading Trader. Hope you're well. In this video, we're going to take a look at two very important pieces of data that relate to the stock markets and also to Bitcoin. And I'm going to show you what impact this could have both on Bitcoin and also on the stock markets, what particular meaning this could have. Let's begin with the first chart here. Now, this chart you see here is a seasonality of the stock market. Now, in just a few moments, I'll show you the seasonality of Bitcoin as well. But first of all, let's just focus on the stock markets first. You see, going back for the last 50 years, this seasonality chart tells us that in the month of June, which is what we're entering right now, the stock markets, as you see here, have a bearish bias. In other words, a negative bias. Okay? In other words, what this chart is telling us how the stock markets usually behave in the specific months of the year. All right? So for example, the strongest month of the year happens to be April. Again, going back 50 years of data on the Dow. And also this can apply to the S&P as well. But certainly the weakest and the worst months for the stock markets tend to be the months of June, which is the month we're in right now, and also the month of September, as you can see here. September actually tends to have a worse record than June. In case you're wondering about Bitcoin, well, here's the chart on Bitcoin. I'll just quickly show you that as well. As you can see here, very similar situation. In fact, we're entering the month of June here, as you can see, and the period from June to October, as you can see here, has actually a bearish bias. In other words, this data, which captures 7 years of Bitcoin behavior, actually shows to us that in the months between June and October, we actually have a bearish bias. All right, so the month of June doesn't have a particular good record, and actually the period from June to October is not a great period for Bitcoin and indeed cryptos either. Now, there is something important that I should tell you, which is that seasonality may be useful, and it's a great piece of information to have, but it's actually more like an unreliable friend. It's a bit like the friend that tells you he's going to be there to make an appointment with you, but it doesn't show up or comes really late, you know? And nobody likes those kind of friends, as you probably know. The problem with seasonality is very much the same. So you have to take it with a pinch of salt. It's not always very reliable. For example, last year, I was kind of expecting that the stock markets would repeat their seasonal pattern of being rather weak, so that we see a pullback and potential buying opportunity. But of course, that did not happen. As you can see here from this chart, notice what happened in September of last year. There it is. Okay, so that's September. And what actually happened that year is that rather than showing much weakness, ended up being one of the strongest periods of that year. Pushed higher, as you can see here on the S&P, and actually became a catalyst for further strength in the stock market, which continued forward from October onwards all the way to January. So I personally have learned that if you just rely on seasonality alone, you might end up paying a heavy price by missing out on potential opportunities in the markets. Same thing happened, by the way, on Bitcoin. If you just take a look over here on Bitcoin. So as you'll see, September, well, actually, no, on Bitcoin, it was more or less correct in that October started the major rally. Okay. So as you can see here, the seasonal pattern of Bitcoin was correct from October onwards. You can see October all the way up to December, very strong period. That corresponds with what we saw on this chart, which is that October to December has a strong seasonal bias. Having said that, though, was it correct to say that the June to October period was weak? Well, let's see. I mean, of course, this is just last year. I would say maybe. June was a rather sideways market. But overall, it ended up going higher. So all I would say is a maybe situation. You might agree with me that perhaps last year was an exceptional year for Bitcoin in that it kind of broke all the rules, more or less, and that ended up going by 1,000%. In any case, bottom line is this, guys, that if the seasonal patterns repeat themselves on Bitcoin and the stock markets, it appears that perhaps the best buying opportunity could be in the month of October. In other words, the end of September or the month of October. In other words, if one were to completely ignore the charts, it's possible to say that if these seasonal patterns on Bitcoin and the stock market were to repeat themselves this year, then one could perhaps just ignore the entire period from, June to October. Just ignore that entire period and just wait for October and then potentially look for buying opportunities at that point. And the same thing applies to the stock markets as well. As you can see here, the month of May to September are usually weak, which is why you've heard the phrase sell in May and go away. And usually the best period starts from October to April. Okay. Having said that, though, as I've just explained, I don't think it's a wise idea to just rely on seasonality on its own. It's a good idea, in fact, to combine seasonality with the chart. So looking at the chart patterns, looking at the actual market and looking for potential trade opportunities rather than just relying on seasonality as one piece of data. All right. So it's always a good idea to combine it with what you see on the chart. And by the way, I just want to say this, that I personally think that looking at the NASDAQ right now, given what it did on Friday, for example, I mean, just in a previous video, I'd said this. In a previous video, about a couple of weeks back, I think it was, I said, look, the NASDAQ could be forming this head and shoulder reversal pattern. So that's the head. And I said this might be the two shoulders. Given what the NASDAQ did last week, made a strong jump higher, I think that pattern, that negative pattern is not going to be negated. All right. So as I said in the previous video, if the markets do the opposite of what we expect, we have to quickly change our minds. One of the worst habits of traders and most people in general is confirmation bias, or as psychologists call it, cognitive dissonance. In other words, they look at a chart like this about the seasonality of the stock markets, saying that, oh, June has a bearish bias, and then they look at the chart and they try to confirm their bias or assumptions. That's wrong. All right. What you should always do is look for any signals that actually are contrary to what you believe to avoid any confirmation bias. All right, guys. So I personally think that that's head and shoulder pattern is not going to be negated. I think that actually, more likely than not, looks quite bullish to me on the NASDAQ. And the same applies with Bitcoin. Looking at Bitcoin, look, as far as I'm concerned, as long as Bitcoin is holding itself above the February-April lows, there's no reason to suspect that seasonality pattern is going to repeat itself. But if Bitcoin does fall below its February-April lows, as you can see there, then I think, yes, that seasonal pattern we just saw could certainly come into play. All right, guys, hope this video has helped. And if it has, please give it a thumbs up. And also please remember to subscribe to our videos for future updates. Thanks very much.